Blockchain and insurance, we're going to discuss use cases and implementations. Almost all major insurers are planning to integrate blockchain by 2021, according to PwC PricewaterhouseCoopers. And at first glance, such a high level of commitment to new tech may seem surprising in an old and traditional industry such as insurance. However, enterprise blockchain adoption is poised to help insurers significantly cut costs, become more responsive to customers, and write more business. Two reoccurring themes throughout this following post are: one, blockchain can lower costs for insurers and lower insurance premium for customers, and two, blockchain can help insurers to understand and price risk better by allowing customer risk and policy information to be shared more quickly and securely across parties in the insurance ecosystem. And this will increase revenue and growth prospects by allowing insurers to price insurance products more accurately. Costs are becoming a major issue for insurers. Life insurers in Asia and the US have seen cost ratios climb above 30% and 20% respectively over the past few years. And this figure should ideally be below 20%. Part of this is due to increased compliance costs such as KYC, Know Your Customer, and anti-money laundering AML laws. A bigger reason is that selling and servicing insurance policies is still a complex and labor-intensive process. A recent EY Ernst Young Insurance Market Report showed low growth rates for life insurance and non-life insurance outside Asia Pacific. In digging deeper, life insurance premiums in the US declined by 0.04% from 2012 to 2017. Insurers find themselves needing to reduce operating costs and write business more effectively. While blockchain is not a magic elixir, proper adoption will help address these needs. What is blockchain? In their book Blockchain Revolution, authors Don and Alex Tapscott describe blockchain as an incorruptible digital ledger of economic transactions that can be programmed to record not just financial transactions, but virtually everything of value. Organizations need secure ways to record transactions and manage information flows, making blockchain's appeal easy to see. And blockchain ensures that all participants have a copy of the digital ledger and that each copy is updated in real time when transactions occur. There's no civilized server, making hacking next to impossible. A recorded transaction theoretically cannot be reversed, which makes the ledger a mutable source of truth no matter how many participants hold copies. And transaction data, records, and participant identities can be authenticated while remaining private. Enterprise blockchains used by companies are different from public blockchains such as Bitcoin and Ethereum. Public blockchains are too clunky and slow for enterprise purposes. Enterprises require scale and speed, the ability to process hundreds of thousands of transactions very quickly, and public blockchains suffer from very low transaction speeds. Their verification process is cumbersome because participants are unknown and untrusted. Private enterprise blockchains don't suffer from this limitation since all participants are known and trusted. Enterprise blockchains have the following characteristics. Participation requires invitation. All participants in the blockchain network are trusted. Data is private and secure. You don't have access to transactions that you are not a party to, even though you're on the same blockchain network. Enterprise blockchains are fast and light. The network can handle thousands of transactions per second and numerous participants working in tandem. And smart contracts automate processes. Transaction rules and process flows can be programmed to execute automatically, allowing payments and transfers to execute without human intervention. For example, the insurance industry will benefit from blockchain because most underwriting and claim activities require cooperation among multiple parties. Some of these parties are from outside the firm, making data security very important. Reconciling data from multiple sources during claims investigation, for example, is time and resource intensive and prone to manual error. Putting this data on a blockchain would streamline operations. Moving on, blockchain use cases in insurance. Industries have already adopted technology that has made it easier, faster, and cheaper to conduct business. Blockchain tech promises to deliver on all three fronts, especially in the insurance industry, which is seen as slow and complex. Let's face it, insurance customers don't enjoy interacting with insurance companies. Customers often deal with time-consuming paper forms when applying for a policy or submitting a claim. They have to speak with people at insurance companies and hospitals, for example, to get medical insurance claims reimbursed. On the flip side, insurance companies have to deal with the high costs of managing and servicing policies. Many of these costs are administrative, claims administration, verification, and reconciliation of information and paperwork. Insurance also requires coordination among many parties: consumers, brokers, insurers, and reinsurers. This introduces overhead costs that translates to higher premiums paid by customers. And blockchain can make selling and servicing insurance better, faster, and cheaper by improving fraud prevention, claims management, health insurance, and reinsurance. The end result could be lower prices and better experiences for customers. Moving on to fraud prevention. According to the FBI, non-health insurance fraud in the U.S. is estimated to be over $40 billion per year, which can cost families between $400 to $700 per year in extra premiums. Common types of insurance fraud can be eliminated by moving insurance claims onto a blockchain-based ledger that is shared among insurance companies and cannot be modified. It can prevent criminals from collecting money from different insurers for the same claim. For example, blockchain will make coordination easier among insurers. If all insurers access a shared blockchain ledger, they would know if a claim has already been paid. Since all insurers use the same historical claims information, it would also be easier to identify suspicious behavior. Insurers currently try to detect fraud by using publicly available data as well as data acquired from private companies. The problem is that these data sets are incomplete due to legal constraints around sharing personally identifiable information of individuals. Blockchain by cryptography securing data would allow claims information to be shared among insurers without divulging personally identifiable information. Moving on to claims management. Putting insurance policies on a blockchain and smart contracts can radically improve the efficiency of property and casualty (P&C) insurance, saving insurers more than $200 billion a year in operating costs, according to BCG. Let's use car insurance to illustrate this. If you get into a car accident that was the other driver's fault, you must submit a claim to your insurance company to recover the loss. Your insurance company investigates your claim and tries to recover money from the other driver's insurance company. The other insurance company has its own claims process, which leads to duplicated work, delays, and possible human error. The end result is that you get paid much later than you like, and insurers spend time and money on unprofitable activities. Putting insurance policies and claims data on a blockchain that different insurers, reinsurers, brokers, and other parties can access reduces duplicate manual work by different parties. Insurance policies as smart contracts on a blockchain automatically execute program claims processing actions, automating information transfers between insurers and other parties, and releasing payments to policy holders. Additional info such as claims forms and supporting evidence supplied by policyholders can later be added to the blockchain so that all parties have the same information, making disputes unlikely. Moving on to health insurance. Blockchain enables fast, accurate, and secure sharing of medical data among healthcare providers and insurers. This will translate into faster health insurance claims processing and lower health insurance cost for customers. Privacy laws around sharing patient data among hospitals and health insurance providers make it time-consuming and expensive to process health insurance claims. And lack of data can lead to insurance claim denials. Patients deal with numerous doctors, hospitals, and insurers over time and across borders. A patient's medical history exists in fragments across healthcare providers and insurers. Worse, the way in which insurers and healthcare providers cooperate, share patient data, and process claims involves complex manual work and reconciliation. Even the technical infrastructure for medical records is outdated. In putting encrypted patient records on a blockchain allows healthcare providers and insurers to access a patient's medical data without sacrificing patient confidentiality. An industry-wide synchronized database of patient data can save the industry billions annually. Patient privacy is ensured because the blockchain stores cryptographic signatures for each medical record, which verifies the authenticity of the record without actually storing any sensitive data on the blockchain. Changes to a patient's medical record are also stored on the blockchain, which creates an audit trail. And moving on to reinsurance. Data sharing among insurers and reinsurance companies is complex, time-consuming, and requires inefficient manual work. Blockchain can streamline information flows between insurers and reinsurers. Reinsurers provide insurance to insurance companies. That way, insurance companies won't get wiped out when many claims occur at once, such as during a hurricane or earthquake. The problem is that reinsurance processes are lengthy, inefficient, manual, and based on one-off contracts. Insurance companies generally engage multiple reinsurers for the same reason, which means that data has to be shared among many companies to settle claims. When reinsurers and insurers share a blockchain ledger, data related to policies, premiums, and losses can exist on insurers and reinsurers systems simultaneously. This takes away the need for reconciliation, which saves time and money. Reinsurers can also automate claims processing and settlement. PricewaterhouseCoopers estimates that blockchain can save the reinsurance industry up to $10 billion, which can then lead to lower insurance premiums on customers. Moving on to blockchain implementation in insurance. In saving the best for last, here are just a few examples of how the insurance industry is using blockchain. Keep in mind that at this point there are more prototypes and POCs and full-scale implementations. R3 is an enterprise blockchain company. It maintains an ecosystem of over 300 firms across industries that build blockchain software apps on top of its core platform. These apps can be used across industries from insurance to banking to healthcare. R3 maintains two versions of Corda, an open source platform and an enterprise-specific version called Corda Enterprise. Both versions of Corda are compatible with each other. Insurance-specific applications on Corda are designed to help insurers automate back-office activities, streamline operational flows, and generally spend less time on things like claims administration and data processing. There are also apps being developed to speed up underwriting and enable faster data sharing among insurers and reinsurers. Basically, Corda wants to host a common set of insurance apps that the entire industry can use to cut costs and boost revenue. Corda currently boasts over 15 insurance-specific apps, with a few of these deployed in production, such as Blacksure OS, which solves problems related to legacy systems, slow manual processes, and high rates of errors by automating policy administration and claims activities. Policyholders can access all policy and claims info in one app. And Midas, which is a motor insurance authentication platform designed to serve 80 motor insurance companies in Hong Kong. It provides real-time authentication of motor insurance policies, verification, and audit trails. This can help with fraud detection and reduce time required for certain verification activities when it comes to policy and claims management. Moving on to B3I, which is a blockchain consortium. Now an independent software company supported by leading insurers and reinsurers, including Swiss Re, AXA, Zurich, Munich Re, and Alliance. They develop blockchain-based applications for insurers and reinsurers and aim to create industry-wide standards. B3I aims to use blockchain tech to streamline back-office processes and claims management, basically lower costs and do things faster. In 2018, B3I switched from IBM's Hyperledger Fabric to R3 Corda's platform. In July 2019, they launched a catastrophe excess of loss product on Corda. The product is designed for brokers, insurers, and reinsurers to negotiate and place risk more efficiently by reducing manual activities related to placing, renewing, and managing treaties. AXA. In 2017, AXA launched Fizzy, which is a blockchain platform for flight delay insurance. Customers purchase flight delay insurance, which is recorded in a smart contract. The platform is connected to global air traffic databases and receives flight statuses. If a customer's flight is delayed for more than 2 hours, the smart contract automatically triggers payment to the customer. Customers don't have to fill out claims forms or speak to service reps. The claim is deposited directly to their bank account. Customer satisfaction maximized. AXA does not have to spend time processing claims, verifying flight data, or ensuring paperwork for payment authorization. They saved on time and cost and can deploy these resources to more profitable activities. Blue Cross. Hong Kong insurer Blue Cross is using blockchain since April 2019 to speed up medical insurance claims processing and preventing fraud. Blue Cross's blockchain platform validates claims data in real time, which greatly reduces fraud potential from duplicate claims filing. For example, claims are also processed faster than their 200,000 plus customers. The platform also removes the need to reconcile claims data across parties such as insurers and medical service providers. Medical practitioners such as doctors and chiropractors who don't employ many admin support staff could save time and money by partnering with Blue Cross. InsureWave. InsureWave is a blockchain-based marine hull insurance platform launched in 2018. The platform was a collaboration among Ernst Young, Myers, Microsoft, among other companies, and it was built on R3's Corda platform. InsureWave provides real-time information on ships' location, condition, and safety factors that both insurers and customers can access. If ships enter high-risk areas, InsureWave automatically factors this into underwriting and pricing calculations. Premium calculations for this type of insurance are very complex. Having an immutable audit trail for ship-specific information specifically eases the calculation, enabling accurate pricing and speeding up underwriting. Insurers are also able to better account for ship-specific risk. The future of blockchain and insurance. These are still early days. Most of the work around blockchain and insurance is in the proof of concept phase, and regulation is slowly catching up. However, we have seen some applications that have gone live. The quickest win for blockchain and insurance is in the area of cost control. Rising costs are hitting insurers across many markets. Blockchain platforms and dApps that allow firms to free up resources by automating claim management, fraud detection, and data reconciliation, for example, will be hardly endorsed by executives. The real win will be when blockchain platforms enable insurers to create better products and onboard customers faster, things that bring in revenue. For this to happen, we need a more robust ecosystem of insurers, reinsurers, tech companies, and service providers working together on industry standard blockchain platforms. This has already started with software companies like R3 launching enterprise-grade blockchain platforms such as Corda Enterprise. We also have leading insurers involved in B3I that share common goals related to blockchain development. It remains to be seen if these natural competitors share enough long-term interest to sustain the initiative. If not, industry-wide blockchain adoption may take longer and become more fragmented. However, the benefits are too obvious to ignore, and we'll probably see a few community companies invest early in blockchain and enjoy a short period above normal performance, with early adoption coming from mature markets burdened with high costs as well as some parts of Southeast Asia. Example, China, which proactively adopts tech. The rest of the industry will follow.